All right. Okay, so welcome this morning. I'd like to welcome you to our Millionaire by Morning Mentality group today. I wanted to kind of introduce you as an expert in the field of funding. And today, members, we have Christian Arce, who is an expert at funding. And I wanted him to tell you a little bit about his background and his expertise and a little bit of his experience, which may help you out in reaching your dreams and fulfilling your dreams, beginning with funding. So good morning, Christian.
Good morning, Rashad, and thank you for having me. Good morning, everyone in the group. Um, my name is Christian Arce, like Rashad said, and I'm a consultant and a real estate investor out of Chicago. Um, a little bit of my background, like Rashad was asking, is I started back in the 2000s in financing, mainly in mortgages, real estate mortgages, and I spent quite a bit of time in there, about 10 years until 2010, 2008 happened, right? And after that, everything got shift, right? And we had to sort of reinvent ourselves in many different ways. We had to change the way that we were doing things, and we had to reinvent our companies to be able to stay afloat, right? That recession, as you know, it took a long time to get for everyone to get back up, right? And it took a long time actually to hit the bottom, right? So, and one of the things that we learned throughout that time was that mortgages and the regular financing that we were used to at that time changed, and at the same time wasn't the only option anymore, right? um, and when I'm talk about the only option is because in real estate, for me at least at that time, it was the only way that I thought that we could finance businesses or real estate for that matter, right? And obviously after that we had to be a little bit more creative in financing our deals and financing our companies. So we had to kind of learn different strategies on how to do that for our own company, for my own company, for myself, right? So that's how I kind of learned a lot of these strategies that we're going to talk about today. And now we specialize in helping new business owners from any uh, industry, okay? And at the same time, we love to work a lot. We do work a lot with the real estate industry as well, right? But it's not limited to that. This is actually a strategy that you can use for any type of business that you are either running right now and you like to grow, or a new business that you're looking to get started, right? So and that's we're gonna jump right into that, and that is what we're talking about is mainly business lines of credit, right? How can we fund our business when it's brand new, right? When we're just starting. Obviously, it's a little bit easier when you are already on the run and you're already running the business for a year, 2 years, 3 years, and you've been, sort of successful, a little bit successful, or very successful, right? So in those areas, usually it's a little bit easier to get financing. And I think that being in business for a little bit of time, it kind of tells you a little bit. You already know a little bit of different ways to fund your own business, right? Because you've been out there for a while. Now, for the people that are just starting to create a new company, a new business, there's always that thought, that question in their mind, which is, how can we fund my business? How can we get to that dream business that I'd like to, right? And that was my question as well back in 2009, 2010, when we needed to kind of restart our business in real estate, right? So by doing that, so the way that we have to think about it is when you open a new company, when you open a brand new corporation, say, and you incorporate yourself and you open that company, is like having a new baby, right? And why I say having a new baby is simply because when you're brand new baby, right, newborn baby, you get a social security number from the state, from the government, right? So companies get the same thing as soon as you open them. You need to get a social security, which is the EIN number for your company. Now, companies can also generate credit the same way that we do personal, Rashad. So that's why we say that it's like a newborn baby, right? So we're gonna have to start. We have to create that credit history for our companies in order to be able to finance our companies to the level that we dream about getting it, right? So and that's one of the things that we need. Obviously, getting to that dream, it takes a lot of work, but we're gonna talk about the financing part of that dream right now. So so by doing that, we can, by generating credit under your corporation, it's going to allow you to finance most of the initial costs that you're going to have to start up a company, right? So I don't know if that's been your experience as well, Rashad, with whenever you started your company.
So here's a question that I have that I know a lot of people want to get clear is there a difference between personal credit and business credit? And if you don't have any business credit, how can you begin to get business credit? Is it based off of your personal credit initially?
Right. Well, usually when I get that question a lot is I would tell them the same thing, which is they're typically the same way that you generate credit into a business, the same way as you generate credit for yourself, right? So now, when you personally already have built up your credit for many years, you're going to be able to help that company generate credit a lot easier than if you wouldn't have, built up your personal credit, right? So, but the building process per se is exactly the same, right? By being able to get financing for or get credit for the company and show the ability of repaying, right? So the same way as we do it with our personal credit cards, personal loans, and etc. Right? So companies work the same way. Now, the difference is now when you personally have good credit, you're going to be able to boost your company's credit a lot faster than just doing it on little steps, right? So there is a lot of misconceptions out there because there is, a lot of people want to jump and help their own company generate that credit, but they have, in order for us to do that, we have to look at your personal side. If your personal side is great, then we're going to be able to boost your company. If it's not, then you can still generate credit under your company, but the process is a lot slower. Okay, so that's the only difference. But the process itself is typically the same.
Okay, so what you're saying is start out with personal credit, get your personal credit built, and then go and transfer that to your business credit.
Yeah.
So with that being said, is there with the line of credit or the creative type of funding that you're referring to, what are the steps to get those to get funded?
For those business lines, the way that business lines work, usually for a new company, and even for an older company, okay? Because the thing is that it all depends on what type, for older company, it all depends on what type of credit they've been able to generate. And there is a lot of companies out there that have been out in business for a long time, and they never generated credit under the corporation too. So that is, gets treated as a brand new one too. You know what I mean? So, but for a brand new company, the way that it works is that they're going to be looking, they're going to look at your credit as the owner or any other partner. It doesn't have to be one person. Let's say if in the corporation there is more than one person, two, three, or four people, and one of them doesn't have the credit requirements per se, if the others two do, then we can work with anybody within the company that has the credit requirement. And what are those credit requirements? I usually, typically, they want to see on your personal side, they want to see at least 5 credit cards, right? They have anywhere from 5 to 10 years history on your credit. And usually they like to see anywhere from 20 to $30,000 in available credit on your personal side, right? And a lot of people will say, well, if I have that much credit on my personal side, why would I need, right, more on my company? Obviously, it all depends. It depends, if you need more money to start up that company, sometimes 30,000, 25,000 is not enough for you to jumpstart that business, right? Sometimes we have clients that are looking for 100, 200, $300,000, to start up a company, right? So it all depends on how much you need. But at the same time, the difference is that by being able to help your company generate that credit and getting those business lines of credit under your corporation, the great feature that those lines of credit have are that, and one of the ones that I love the most is that they do not report to your personal credit. So when you're running a business and you're financing some of your things with a credit card, you're going to max out that credit card more than one time, right? So you're going to max it out, pay it off, max it out, pay it off. And when you do that with your personal credit, you kind of take your personal credit through a roller coaster on, using the credit card, maxing it out, your scores go down, then you receive some money, you pay off the credit card, your scores goes up, and then you need to use it again, and then your scores go down, right? So that's the problem that is using personal credit compared to using your company credit. Using your company credit will, since they don't report to your personal credit, they will maintain, you will be able to maintain your credit scores always.
So I have a question based on that,
Sure.
as far as the personal credit or as far as credit period.
Okay.
So I'm pretty sure that people are, hesitant or reluctant because everyone always been taught that credit is a bad thing. Having credit is a bad thing. What do you say to
Credit
that?
cards. Well, the thing is that credit cards are bad if you don't know how to use it, right? So that's one of the things that I always tell. There's a lot of people out there say, no, I don't want credit cards for my business. But the thing is that even if you get a cash line of credit, okay, would you say that a lot of people are looking for those cash line of credit? That the difference with those cash line of credit is that you have actually cash available, liquid cash, or you can write a check per se and pay someone compared to credit, right? Is that usually sometimes the interest rates are a little lower. But the thing is the next, what I tell my clients all the time is credit cards for your company are made for financing your things for short term. This is, credit card is not a 30-year loan for you to keep on it for 30 years. You know what
Can
I
you
mean?
give an example? Can you give an example of short term?
Yeah, let's say in real estate, we use it in real estate a lot. I personally use it when I buy a property and I want to renovate that property. I can pay my renovation easily, $50,000, $100,000 worth of renovation, all with my credit cards, right? Why would I prefer to use that instead of my own cash, right? Is because, first of all, I like to stay liquid as much as possible, keep that cash on the reserve for anything that we need. And then second of all, is because that project that I'm doing is going to take 3 months to 6 months, right? And once I finish that project, I sell that house, I'll pay all the credit cards back. So that takes you, less than 1 year. Short term, we're talking about less than 1 year, right? Why? Because credit cards allow you to make a minimum payment, right? Which usually is less than what if you would ask for a loan. Let's compare it to a loan, right? Let's say that you have a credit card, you have $50,000, and you have a loan, you can get a loan, a liquid cash loan for $50,000, right? That's fine. You get the liquid cash and you spend as you wish. There is no difference with the credit card. You get your credit card, you spend as you wish, right? Now, the difference is with the loan, as soon as you get that loan, you get the first payment the next month, right? And it's going to be a fixed payment most of the time, or a fixed payment every month for 5 years, 7 years. We have those loans too, right? Interest rate, usually they go for anywhere from 6% to 12%, depending on your profile. Now, credit cards is, let's say you get a credit card today, but you haven't bought the property yet, right? Let's say that you're buying a property in a month or 2 months. You don't have to pay anything on the credit card if you haven't used it, right? You don't have any monthly payments to make if you don't use it. The loan, as soon as you receive that money, you got to start paying, right?
Right.
And now, once you use that loan, that cash from the loan, if you need more or you need it again for another project, you have to go and apply it again, right? Or every time you need that cash, you're gonna have to go and apply it again. And the thing is that usually, our credits, when we're at least in real estate, our credit fluctuates a lot. So it all depends on the industry that you are. When you use financing a lot, your credit fluctuates a lot, right? So I don't know if maybe in the next project, I'm going to be able to qualify again for a loan, right? Instead of the credit card, I qualify one time, I got it, and that's it. I don't have to be qualifying every year or every other project to get it again. You know what I mean? So, and then the other features that credit cards have is that you can push them up. You can increase your limits as many times as you want, right? So as long as you show a good repayment history, then that's never going to be a problem. I got my first few credit cards for my company back in 2010. And then religiously, every year, every 6 months, I will call and I was asking for more additional funds or increase my limit. I need to increase my limit. And what do they do? As soon as you call, they look at your history. Let me see how you've been using it, right? So, and they saw that I was maxing them out, paying them off, maxing them out, paying them off. But they saw that we had the ability to pay them. You know what I mean? And when they
So,
see that, they want you to use it more.
well, yeah, of course, that sounds like a credit card
Right.
company. But so this is something as far as short term to explain that or get a better grasp of it. Not 30-year, not for a house, a home, not to buy property to hold on to, but
Well,
more like,
wait. Let me stop you right there. So, you can buy a property with it too. So I did the same thing. The first year I got those lines of credit. Okay. I bought a 4-unit building, right? So I utilized those funds that we have to buy a building. Obviously, at that time we're talking about 2011, 2012, right? prices of the properties were way low back then, right? So I was able to acquire a 4-unit building for about 42 grand, right? And I utilized my business cards or the business cards funds to be able to pay for it, right? Why? Because the idea of buying that building was a short-term process too. So the idea was, okay, I need to buy this building, renovate the building, put tenants on it, and then refinance the whole thing, pay my debts, and just hold the property for cash flow, right? And we did that. Me and another partner that I had at that time, we purchased the building with our credit cards funds. And once we owned the building, since we bought it with funds from our credit cards, the building had no liens on it, right? No mortgage on it, right? So with that, I went to another lender, and then I got my construction loan. With that construction loan, we renovated the building, right? And once we renovated the building, we put tenants in there. It was a nice area. We had tenants in there right away. The process took about 4 to 6 months entirely, right? So in the meantime, we were paying minimum payments on our credit cards and a payment for our construction loan. And once everything was done, we renovated, we refinanced the whole building into a 30-year loan, right? And we pay for the credit cards and pay for a construction loan, and we hold the property for cash.
Okay,
Right?
got it. All right. So you started
So,
out in a
right.
creative sense to make a long-term investment.
And that was something that a lot of people, at that time, the same thing as right now. There's a lot of people out there that they don't think that that is possible. And it is. I mean, the thing is that the difference now is that the prices of the properties are a lot bigger, right? But there are states that you can still buy properties for less than $50,000, right? So there is states out there that where you can still buy properties, cash flow for with your credit cards. So you just
So
have
if
to
it
be
was,
creative.
we have people out there that dream of owning, let's say a food truck,
Mhm.
and you can purchase a food truck $50,000 or $60,000. So this would be a good idea to purchase that because yeah, average food truck you can get out there and make $100,000 in a year. Well, maybe not average, but hardworking food trucks.
Yes, the idea um, is to utilize them the smartest way, right? And how would that be? I think that the smartest way possible is to buy an asset, something that is going to give you money back and is going to pay for that debt, right? Like a food truck, right? You're buying a food truck is, obviously it takes your work there to generate the funds, but it's going to generate income for you and it's going to generate enough income to pay that debt back, right? Yeah, that's the best way to utilize.
And so as far as the credit is concerned, oh, the question I want to ask is what about collateral?
Mhm.
Is collateral needed for, this is not your average everyday loan, this is more a creative loan. Can you explain, I guess, a little more about how, because that's the problem a lot of people run into when they're trying to get funding or trying to,
Mhm.
get financial loan or help, they need collateral. Can you explain how this does not require collateral and basically the
Yes,
process?
right. So these are lines of credit, so they're not and the amounts are not enough for them to require a real estate loan, right? So there is no collateral needed at all for business lines of credit, for the credit cards for your business. Is their personal guarantee, right? So like I mentioned before, they do not report to your credit unless you default on them. Okay. So, and a lot of people are, again, there's a lot of people out there that they're just looking for things that, oh, I don't want to give them a personal guarantee. And that's fine if you don't. But the thing is that these are ways, creative ways for you to kind of help your company get started. And when you're getting started, is you're gonna have to put your personal guarantee somewhere in order for that company to move forward. And then once you grow and you generate that credit under the company, you're gonna have the ability to get other type of loans and other things that are not gonna require your personal guarantee. But in the beginning, these lines of credit, that's how they work. They work with you putting a personal guarantee instead of collateral.
Okay, understood. I would tell a little bit about my personal, why this is, I guess I should say, a creative way for me to receive financing, and that's because what I've noticed is everything as far as cash flow, everything can go really well up until a time that it doesn't, and at that point you have to get supplies, you have to pay your people, pay your employers, and just kind of keep up with things.
Mhm.
So this is something that'll come in handy, I believe, in those opportunities, because the cash flow will start back up. But in those type of situations, this
Yeah,
is
more than
definitely
one time. Absolutely. Yeah, I agree with you. More than one time, he's gonna come in.
yeah, yeah, definitely. So
And
um,
and the thing is that obviously, any like any credit card is the revolving feature is what is the best thing, right? Because obviously you can, as long as you're able to pay them off, you can use them again. And like you said, you put that example of the food truck, right? Someone like that goes out, gets a food truck, does well on their business, is able to pay those credit card back, then now you have a line of credit open to grow again. Do you want to buy another food truck? You want to do it again? Do it again, right? It's the same process that we do in real estate, right? Sometimes we say, well, why do I want, those credit cards? Well, the thing is because the process is the same. You can just repeat it over and over and over and over, and you're going to get the same result, right? Buying, renovating properties, putting tenants on it, and refinancing and paying the whole debt. So in the case of a food truck, it's sort of the same thing, right? Let's say you buy your food truck, you are successful with it, and you say, well, I want to grow now. How do I grow? Well, buy another food truck, rent it out to someone. Now that person is paying rent. That food truck is making you cash without you being on it, right? And you finance that debt, and then it pays off, and then you do it again and again, right? There is no um, stop from doing it over and over. That's the freedom that I like the most compared to a loan, right? A lot of people, they get hooked in the interest rate. Oh, but from credit cards, the interest rates are really high. Yes, but the thing is that it gives you the freedom to use them as you wish too. You know what I mean? And compared to a loan that, okay, you might get a low interest rate, but then every time you need, you have to requalify for it. And as you know now, even people don't even hold their jobs for that long, right? People are changing jobs now a lot quicker than before, and sometimes you might find yourself in a situation where you don't have that income anymore, and you don't qualify for a loan. The difference with loans is that you have to show uh, income in order to qualify, right? For business credit cards, you don't, right? You only have to show great history of repayment.
what is the process, the qualifying process or the application process?
Mhm. Well, the application process is very simple. It's very quick. We can give you an answer within 24 hours to 48 hours, depending on the time of the week. And the only things that we need is to look at your credit report and look at your last 2 years of tax returns. Okay, personal tax returns and business if you have it. Now, why do we ask for tax returns? It's simply just to see there are other options out there that we can see based on your income, like those loans that I was telling you about, those liquid loans that you could qualify for. So we look at both ways. We look at to see if you can get Visa credit cards and or term loans that if you qualify for either. So with those two things, you send us those two things, and then we can give you an answer, a pre-qualification answer within 24 hours. Now with the credit report, a lot of people are looking around, they're just shopping around, they don't want us to pull their credit. So for that reason, we don't. So we're gonna ask you to send us a copy of your credit report. Um, we prefer credit reports from Experian.com or myfico.com. So if you're already have an account with those companies, any of those companies, you can just pull yourself your credit report from there. You send us that together with your tax return, you get an answer right away. And we're going to be honest. We're going to tell you, hey, yes, we can raise funds for you, or not, we can. So we're not going to play around. We bring this just to help you. So obviously, if we're not able, if we see that your profile is not going to be good for it, then we're going to tell you that right away. Or if you need to do anything to improve your credit, to do it.
Okay. All right. Do you guys work with any credit building companies or refer to any credit building companies?
Cool. We have a lot of people that we know that does credit repair. And yeah, sometimes we refer them to them just to if they need help with anything, right? Try not to do that, but at the same time, we have been able to meet quite a few people out there that are good, that they're responsible, and they actually do the work that they say they're going to do, and that they're going to be able to help you. Because we don't want to put you through something like that if it's not going to help you. You know what I mean?
What is the minimum and maximum amount that someone can receive?
Usually minimum, I mean, we've seen people getting $1,000 to all the way to 150. I have the largest client, I think it was 210, that was able to obtain in business lines. Um, and we can also combine things, right? So if you say, once we look at your profile, and by being able to look at your credit and your income, your tax returns, we can give you an idea of what we can do. So one, and we're going to tell you, well, we can get you this much in business credit cards, this much on personal credit cards, or this much on term loans, right? So, and from there, you decide, well, I want to go that route, or I want it all, one of the two. So, and then, from there, we start the process, and usually takes about 7 to 14 days.
7 to 14 days. Okay. And what industries do you work with?
Any industries, really. These works for any industries. Remember that this is more based on you, on your personal history and your personal credit. So the industry really doesn't matter. So we can help any industry, any startup company. Even if you open your company today, we can help you today. Okay, so we don't need any seasoning on your company. If you do have some seasoning, obviously is even better, right? They like to see that you're already established, right? But if you haven't, that's okay too. It would all depend on your personal credit. Now, one more thing that I wanted to mention is that uh, it doesn't have to be only you. Let's say if you're the owner of the company, if you're the one starting the company, it doesn't have to be only you, the one that applies. You can, if you have other partners or any family members that are, that are able to help you get your company going, then that works too. So that's something that's a way to keep your mind open and be creative too, right? So just to give you an example, when my personal example, when I started, flipping properties back in 2010, I didn't have the credit to get my lines of credit. right? So what did I do is I partnered with someone that had excellent credit, a really good friend of mine. I partnered with someone that had really good credit. I knew how to do the work. He had the credit. We put those two things together. We got the financing we needed, and we were able to do it together. You know what I mean? So keep your mind always open to be creative with those things. I know that a lot of people sometimes they don't want to ask anyone to do that, but hey, how bad do you want it, right? How much do you want that company to work, right?
Yeah.
Um, so
I just
that's
seen
what you have.
I just seen Grant Cardone do that on his TV show, Undercover Billionaire or something like that. But
Right.
it's basically, if a creative way to do it is to partner with someone that they bring maybe good credit to the table, or they bring the money to the table, and what you have in exchange is sweat equity,
Mhm.
or your knowledge is what you
Right.
bring to the table. And more so than none, people are willing to make that exchange. They may
Yeah.
not have the time, they may not have the know-how, and may want to be in a certain industry.
Yeah.
So they're willing to do it. And you just have to open your mind in ways of being creative, especially when it comes to
Yeah.
funding your dreams.
Absolutely.
So
And look, the thing is that he had a full-time job, right? So he didn't have time to go out and do real estate, right? So I did that. I did real estate full-time. So it worked out perfect for each other. You know what I mean? So and that's what you just have to be creative and see. And even if it's something that you don't want to have that partner long term, that's fine. As long as they help you get started. If they lend you the money, they could lend you money, or they could lend you their credit. I've seen in my experience that people are more willing to lend you their credit than their money. Okay, because the money is hard earned money. They took them a long time to save that money, and it's harder for them to let them go. You know what I mean? In a new venture, right? But their credit, if you say, "Hey, let's use your credit instead of your cash," they're gonna say yes. They're like, okay, let's do it. You know what I mean? So
yeah.
because it's not their money, right? And they're like, okay, let's see how much we can get together, and let's do it. Right? So
And there's a saying out there that says that there's an abbreviation that says OPM. It's best
yeah,
to use OPM, and that
well,
it stands for other people's money, and
right.
that's credit in a sense.
Right. And it could, for me, at the time, I was doing that transition, right? And I was trying to figure out how can I get enough money together to do deals, right? Because again, in the fix and flip business and the real estate business, you can make a great deal of money, but sometimes, one deal is not enough for you to you know make a living per se, right? Yeah, you make a good money on that particular deal, but sometimes it's not enough for you to make a living. So you got to do more than one sometimes to get going and make it a business, if you like to make it a business, right? So the same thing obviously with any business, right? You're going to calculate how much money you need to make to make a living with that business, right? So and for that reason, you're gonna need to see how much you business you're going to need to generate, right? So when I got introduced to business credit, right, that's when I said, okay, if I was able to get 50 grand with one friend, what if I put five more friends together on different deals? I can do that same process over and over and over, right? And that's when the thing just blew up, right? Because you say, well, now you have uh, $50,000 times five, right? You have $250,000 that you can start using. You know what I mean? They can start. This is a way of raising funds for your business. It doesn't have to be liquid cash. It can be in a way of just doing business credit. You know what I mean? And that will allow you to do, of course, you just have to be very responsible on on the way that you use those things, right? But it's very, very easily to do. I mean, I actually met a group of investors here in Chicago that we started helping them raise funds like that. And what they do is actually they only partner with people with good credit, right? And they raise funds like that. They buy properties together as a 50-50 type of transaction, right? They
Yeah.
put their credit, they bring the properties, they do all the work, and boom, then they hold it. They do rental properties all day long, okay? And they, once they buy it, they, do some renovation, put tenants, they buy it at a good price. Then once they are able to refinance, they pay the debt, they move on to the next one. You know what I
Okay.
mean? So,
Okay. So you operate as a business consultant as well, which basically puts you in the planning process, or puts people in the planning process of getting the dream going and getting it financed, getting
yeah.
funding for it. So I just want to let everyone out there know that you do have that as an offer, as a free offer. So if you want to get in contact with Christian, then um, he will be willing to speak with you about from the creation, induction, to the exit of what it is that you're willing to do or try to do. And another thing about the webinars, we have webinars. We're going to connect and create a few webinars to walk you guys through the process. A few of those webinars will be fix and flip. If you're a wholesaler, you'd want to tune in. And what else do you have planned, Christian?
Yeah, we'll teachers out there, anybody that is doing courses, marketing, Amazon, and then professionals, realtors, attorneys, accountants, anybody that is looking to grow their company and they just need funds to do so. This is one of the best ways to do it. Um, so do not hesitate. Any type of company, small, big, anything, we'll be able to help you. And we'll have a quick talk, a 15-minute, 20-minute talk, and kind of see where you are, and where you want to be, and we're going to tell you what we can do for you to get you there.
All right, that's great. If you have any questions, just put them in the chat, add them to the comments, and we'll make sure to get back to you. If you want to get in touch with us, do the same thing. We give you a phone call or inbox you, or you can inbox me through the group or through the live. So I want to thank you for dropping by today and speaking with everyone in the group, future millionaires.
All right. Thank you very much, Rashad, and thank you everyone in the group. Talk to you soon.
All right, you have a great day.
You too.
All right.